Hi, welcome to ChatIR. I'm Yvette Lokker, President and CEO of CIRI. Today we have James Tickner with us, who's the Global Head of Targeting at Thomson Reuters. We're going to be spending some time talking about how Canadian issuers can effectively target international funds. Welcome, James.
Hi, Yvette. Thanks for having me.
It's our pleasure. Let's start by talking about what companies should be doing when they're targeting international funds.
Well, it's an interesting question, and I think the first thing to say is that the timing is good. Certainly, I think it's been well documented in the last couple of years that flows away from actively managed funds, so towards more of the passive and ETF funds, have been pretty rife. But actually, some particular types of funds have been fairly resilient through that period. And one of those classifications would be global funds. So that is funds in all regions that have a wide remit to invest. So for a Canadian company looking at the European market, for example, right now, there's actually proportionally a larger pool of assets that they can attract. So I think, first thing to say is that the timing is certainly good.
Can you please provide some perspective on European markets and highlight any countries that may be of particular interest?
Certainly I think when you look at the European market, the first stop for most companies is always London for many good reasons. Often companies will have a number of other legitimate reasons to be in London, so it makes a lot of sense. And clearly that is very much the deepest market and also the largest investor in North American equities by some distance. I think when you look outside that, actually things change a bit, and certainly some of the markets that naturally you might think would appeal and would be a sensible choice may actually not, based on the most recent data. So, for example, a market like the Netherlands, we've seen relatively a tier 2 market in terms of assets. But for a North American company, interestingly, they have over 40% of their portfolio invested in North American equities. So, in terms of orientation, they're very much North America focused and should be definitely considered. The other great thing about the Netherlands is it's really it's a small group of very large investors, so an IRO can be pretty efficient with their time meeting investors in the Netherlands. I think one of the other things we've seen is some of the more traditional markets, and I probably would call out Paris here as a good example. Of maybe 2 or 3 years ago, this would have been high on the list for a company to visit. Clearly, while there are a number of large managers still there, we have seen them suffer from some pretty heavy redemptions, some of the largest funds there. And actually, their appetite for North American equities has certainly tailed off a bit from what we've seen. And so maybe there may be other alternatives, particularly looking at some of the Swiss markets, so Zurich and Geneva. Certainly, Edinburgh is very interesting based on the data. There's certainly some big funds up there. Baillie Gifford, Standard Life, for example, that have real appetite for Canadian equities.
Are there any investment trends that Canadian issuers should be aware of? I
hear that there's a lot of long-term funds. Our funds in Europe generally longer term. Now, whilst that is generally the case, I think we've seen a slight trend towards shorter investment periods over the last couple of years. But also, obviously, the flip side as well of having a longer-term investment horizon is actually that the marketing period can be longer, so it'll take longer to get to a point of decision making. So something to bear in mind. Furthermore, certainly from a more of a financial characteristic standpoint, I think obviously more and more Canadian companies paying more in terms of dividend yield. That is certainly going to play well for the European market. We know there is far more appetite for dividend yielding among European investors. That's unsurprising, given that the European market as a whole yields much higher than the US and North American equivalent. So that will certainly play well. We've seen in this low interest rate environment, of course, real appetite for income through dividends. So that very much applies to European funds. So if you're paying a healthy dividend, then that's going to certainly bode well when marketing to European funds.
That's a great overview of the European markets. What are you seeing in Asia?
It's tricky. I think when you look on the face of the Asian market, clearly the asset base there is very, very significant. And actually, from an overall asset standpoint, it's not that far away from Europe. But when you actually drill into those numbers and look at what proportion is actually managed on an active basis, so there's some real decision making and stock picking going on in the background, that number is greatly reduced down to around 30% of the asset pool. When you then further slice that by saying, okay, what proportion can be invested outside of Asia, and you're really talking about a very small and concentrated pool of influenceable capital from a standpoint of an international company. So with the Asian market, it certainly requires some homework in terms of who you're going to see. The good news maybe is that you can be quite efficient again in the Asian market when looking at when you think about the four sort of key money centers, China, Hong Kong, Singapore, Tokyo, and they're managing over three quarters of the active assets in the region. So although the distances are obviously huge, we're talking here. Really there are a set number of cities to focus on, and then within those cities, there's really for most companies, and again it depends slightly on sector, but there's really 4 or 5 key funds in each of those money centers that make the most sense for an international company. And outside of that, really for most companies at the moment, there's not that much potential.
James, are there certain industries that are more attractive to the international markets?
Sure. So yeah, actually we did some a bit of research into some of the favoured sectors, and I think it's fair to say there's the top 5 cities which are pretty obvious, which are outside of Canada, New York, Boston, Los Angeles, London would be in that group as well. Interestingly, for energy companies, Edinburgh is a place we've been seeing a lot of appetite internationally. For basic materials companies, Paris and Frankfurt in Europe, and we've seen some investment go internationally from those markets. And then, interestingly, for the financial sector, Tokyo appears as certainly high up there for financial companies. They obviously have the trust banks in Japan, which are really a unique type of investor for Japan, but have some significant appetite for financial stocks globally.
It's always very difficult for an IRO to measure their success of their roadshows. Do you have any suggestions on what issuers should be tracking to see whether their roadshows have been effective?
Sure. So I think, in terms of measuring success, it's certainly a difficult thing. We always know that measurement of success in IR is generally a bit of a holy grail for a lot of people. Mostly, it's done based on qualitative factors, so how you felt the meetings went and things like that. The feedback from management. Certainly from our perspective, we feel like it's worth also incorporating some quantitative metrics into evaluating your roadshows as far as possible. And to give you some ideas of how that might work, what we do know is that there's obviously many factors that go into a buy decision, and so just purely basing it on number of shares bought is almost like saying an IRO's job is only as good as relative stock performance. So it's obviously a difficult thing to push through. So what we would suggest is really 3 things. So one is the sense of, okay, once you've defined what is your addressable market, so what is your target market within a particular region, you can obviously look at simple stats around, okay, how well did we reach how well do we cover that market? So how well do we reach those institutions? Make sure we got in front of all of the investors with significant capital that can be invested internationally. And the second one is obviously how well do we align our the most important investors with our management time versus just more of a, shall we say, a reconnaissance mission for if it's a sort of IR only trip. And then lastly, obviously, you need to really highlight where there have been successful marketing, and also understand where you have targeted a fund and you have met them. What else have they done? If they haven't bought you, have they, for example, bought into a competitor? Have they really backed away from your sector? What else can you learn about what their investment traits and what they've been doing in the market?
James, thanks for spending time with us today and providing some insights for Canadian issuers and what they should be doing to effectively market in Europe and Asia.
Sure, my pleasure. Thanks for having me.